Hey everyone, Tara Malarkey. Welcome back to the podcast and our YouTube, wherever you're watching this. If you are on YouTube, you're noticing that I'm in my sun gear here because I'm going to go out on the boat later. Anyway, I wanted to record a quick episode for you, and I'm super excited about today's topic because today we're going to talk about turning cash into assets that pay you. I did a survey on my Instagram and my TikTok recently, and I asked you guys what you want to hear about, and pretty much all the options people wanted to hear about. But this was one of the ones that came up. A few people DM'd me and asked me, yes, Tara, even though I want to make more money, I also want to start understanding what I should be thinking about doing with that money later. And I don't know, like, I think most of you know that I have a MBA and like I have a background in finance. I worked in finance actually after I graduated college. My MBA is in finance. So I do have a mind that like works that way. Like I like looking at economic markets, what's happening in the economy and all this stuff. And I know that like so many of you don't, and no shame, no shade. Like I get it. It's not for everyone. And there's pieces of it that I don't like either. Like there's a level of it that can go too deep where I'm like, meh, now I'm not so excited. But so like my main goal here is to kind of break it down simply. So if you like know about this stuff, you might feel like, I kind of know what you're talking about, Tara. But if you don't, and you really want to like learn more, then this is going to be just a short podcast episode that's going to just give you an idea of what you should be thinking about as you grow the money that you have. You know, when I first started coaching or first started my business, all I wanted to do was make enough money to pay my bills, right? And that may be where you are, or maybe you're starting to get past that point now where you have enough to pay your bills, but then what do you do with excess cash? Like even 5K or 10K, you know, most people, what happens is they end up spending it. So that's kind of what I want to start with. Is I want to start with talking about what are depreciating assets and what are appreciating assets. And I think it kind of seems and sounds, and you've heard it before, it's obvious, but let's just talk about it for a second. Depreciating assets are things like cars. Cars do not appreciate, right? They do not go up in value once you buy them. I actually just bought a new car and I know already it's a very expensive car, but I know that that is not something I'm banking on it making me money at all. It's just a privilege that I have for the money that I make, that I get to drive the car that I want to drive, but I do not expect it to make me any money. I also have, you know, a nice little collection. It's not huge, but I have a little collection of luxury bags, Louis Vuitton and Chanel and Yves Saint Laurent. And I have some nice shoes, and I do not expect them to appreciate. While some people do really go into the market of luxury goods and they figure out how to resell and all this stuff, of course, maybe it's possible, but I'm not in the business of doing that. And I don't see myself being in the business of doing that. I do think that they are somewhat of assets. Like I do take care of them well, and I want to take care of them. And who knows, you know, maybe one day my Chanel, you know, bag will be worth more. I don't know, but I'm not banking on it. And, you know, like expensive dinners or even expensive watches and Rolexes, like, yeah, has someone resold a Rolex watch for more because it was very rare? Sure. Or they don't make it anymore? Sure. But we don't want to like bank on that being the way that we make money. Most of those things, like I talked about, are D assets. They're depreciating assets. And it doesn't mean you shouldn't buy them. It just means that you should only dedicate a portion of your income or your cash or your reserves to things like that, because they won't make you any money. And a larger portion of your cash or the money that you make should go to assets. And what are appreciating assets? What are things that go up over time? Now, you all know we're all talking about a recession right now. We're all talking about maybe the housing market crashing, that it's been in such an inflationary time period. It's like it can't stay that way, right? But when I talk about these next few assets, just think like over time, meaning over 10, 20, 30, 40, 50 years, these things go up in value, right? So like when I think about the house my parents bought, before I was born, they paid $46,000 for it, right? You couldn't really buy a house for $46,000, especially in Fairfield County, Connecticut, which is one of the most expensive places in the country, right? Because it's right outside New York City. So now it's worth, 10 or 12, or I don't even know, like probably more times that. So when you think about that, right, like real estate is absolutely going to appreciate. Now, will it appreciate over the next year? Probably not, actually. The market is probably going to stabilize and maybe even dip a bit in certain markets, but it will appreciate eventually. And the reason for that is because, well, human population is growing and there needs to be more and more places to live. And so that puts more demand on real estate. That's not going to go away. And there's a limited amount of earth, right? Like there's a limited amount of land that is not being regenerated. We cannot regenerate more earth. So there's only a limited amount. That means the value over time is going to go up. Okay. The stock market, actually, while you can absolutely lose money in the stock market, if you dollar cost average and invest in the S&P 500 over time, you are going to appreciate. It might not be a lot of appreciation, but over the years, if you keep investing in that 20, 30 years later, that's kind of like a retirement strategy, you will have more money. And the other asset that I just want to mention now, of course, we could talk all day on these different things, but the other one that I want to mention are businesses. So buying businesses that cash flow or growing your own business, growing your own brand, those are appreciating assets. Now, in every one of these cases, can you lose money? Can you lose money in a business? Can you lose money in the stock market? Can you lose money on real estate? Absolutely. Nothing is a guarantee. That's why you want to have a smart brain and kind of understand like what you should be doing, where you should be investing. But businesses, they tend to give you a really great return on your money if done well. Okay. So now here's what I want to share with you is that over the last 10 months, I moved from California to Florida, and I decided to keep my house that I bought 5 years ago in San Diego, California. And, it was kind of like a controversial decision because so many people were saying to me, you should sell, right? Because it was 2022 and the market was probably as hot as it's been in a long time. And my house had appreciated a lot. And so if I cashed out, I would have made a lot of cash. And that was an option, of course. However, because I have, a mind for real estate, I grew up with a realtor. My mom was a realtor. My aunts are realtors. And I also had a little stint being an Airbnb host when I lived in LA. I didn't actually own the house that I lived in, but it had a ADU, or an additional dwelling unit, they call it in California. You could call it a converted garage or a little cottage. And I lived in Venice Beach. And so I had a beautiful house and it had a cottage in the back, or a converted garage. And I rented that out on Airbnb. And that paid for over half of my rent on Venice Beach. I was house hacking at the time, before I think house hacking was a thing. And I didn't have to run into any of the regulations that people have to do now in popular cities, or in actually most cities now. There's a lot of Airbnb short-term rental regulations. I didn't have any of that. But my point is that I had done it, and I had done it well. I decorated it like nicely and simply and in a way that people who were coming to Venice liked. And so my place was booked out almost all the time, and I learned how to host. And so I had this mind like, hey, listen, yeah, I could cash out and maybe make $400,000 or $500,000 cash right now from this property, but I could also keep it if I don't need that $400,000 or $500,000, and I could have it cash flow for me, which actually is going to make me more money in the long term. Why? Because the appreciation over time is going to stay there. Even if it softens a bit, it's going to still be there eventually in a few years. So it's going to be worth the same. And if I wanted to sell it at any point, I'm still going to have that there. And I'm going to actually have my mortgage paid for, but not only paid for, like I've been making 2 to 3 times the mortgage or the cost to keep the property from Airbnb. And so that's the decision that I made. And the main key reason I was able to do that, guys, is because I did have enough cash flow to move, and to get myself set up in another state without needing to sell my property. And that is a luxury that I have that not everyone has. All the more reason why you want to financially take care of yourself, right? So you have more opportunity like this, right? Someone who has more cash flow is able to take advantage of opportunity like that, like I just did. The other cool part about that is that I didn't actually have to deal with the short-term rental aspect. I mostly had what they're calling now midterm rentals in my house in California. And that means that most of the people that have rented from me in the past 10 months have been people who've stayed 30 days or longer. Actually had someone 5 or 6 months because of an insurance, like something happened to their house and their insurance paid for them to stay at my house. And they paid about $7,000 or $8,000 a month because they needed temporary housing. Okay. And so that's been a pretty amazing experience, because the cool thing about midterm rentals is that it doesn't take a lot to host. It doesn't take a lot of energy. There's not a lot of turnover. Okay. So the reason I tell you all of this is because that sort of like, really opened me up to what's possible. And even though I have other ways of making income, I also love the idea that while I was working on my business, I was also making passive income. About 60K total came in from just that one property in the past 10 months. And so that's essentially what I want to kind of give to you in this podcast episode, is that I want to just caution you that as you start to grow your business and grow money, you do not want to start to just spend money. And you don't want to, though, live like frugally either, where you don't feel like you have made any money, right? I definitely spend money. I like to dine out. I like to have nice dinners. I like to have a nice bag. I like to have a nice car. So you got to make the decision that is specific for your situation and your family. But you definitely want to focus and pay attention to how much you are going to spend on D assets versus A assets. So what would I say to you right now in this market, right? Like in this time period where we're possibly going into a recession, housing market is super inflated. So prices are really, really high still. And mortgage rates are still really high, and they're probably going to be high for a while. Well, I would recommend being more conservative than normal about how much cash you keep on hand. So most of the time people would say in a better market, say like 3, 4, 5 years ago, when it was cheap to get debt for interest rates like 3%, then it was actually more advantageous to put your cash into assets, because it was going to do more good for you, all of your cash into an appreciating asset. Right now, because the market is so unstable and there's so much uncertainty, that is definitely a big question. Your cash might be better in something like a Fed Treasury bill that will pay you 5% on your money over like 3 or 6 months, or even savings accounts do that right now, than putting it into real estate when the market is uncertain and we do not know if prices are going to go up. Now, every situation is different. I'm actually looking at a property in North Carolina, and I'm going to be going there in the coming month, and I'm going to be buying another investment property there, even though prices are inflated there and mortgage rates are high. But if I find the right property, I'm still going to invest, because there's a number of personal reasons why it's going to work for me. And it's going to be like a vacation home in the mountains from Florida, but it's also going to be an income producing property for me. And as long as the cash flow of the property investing, like meaning the renting it out, covers the mortgage, even though the mortgage is obviously a lot higher now, the interest rates are higher, then it will still work for me to make that investment. But I do definitely recommend that you keep more cash on hand right now than before. You're more conservative on cash. And the reason for that is because, one, the market is uncertain, and two, you want to be prepared for when there are opportunities in the market that will come in a recession. So unfortunately, we're going to see some more layoffs. We're going to probably see some more foreclosures. We're going to see more houses come on the market, which is going to bring prices down. Once inventory comes down a little bit, or inventory goes up, sorry, prices will come down a little bit. And that's when you want to be ready to jump, right? You want to be ready to buy that investment property. But if you don't have the cash on hand, you need to get out and you need to make cash liquid, and you're going to lose money on whatever you have to get it out of. You're not going to be ready, right? So you want to hold more cash right now. And then you want to think about, though, where you're going, what your strategy is. What are you waiting for? And so right now I will be waiting on, real estate opportunities, because I want to grow that side of my portfolio. And the main reason, guys, I mean, I also invest, and this is not financial advice. This is just what I do. This is not financial advice to you. I just want to tell you that. But you definitely want to think about, like diversifying. And the way that I diversify is I do put a little bit in crypto. Crypto is definitely, you need to have a high risk tolerance. Who knows? It could go to zero. I'm comfortable with the amount that I'm investing. I actually invest a little bit in the biggest coins weekly, and that happens like automatically. So I don't even see it. I don't even look at it, but it's just growing my portfolio there, keeping me diversified. And if there's a big win in the crypto space, then I'm going to benefit. I want to be in the game, right? I don't want to be out of the game and then be like, why wasn't I in the game? The other thing I do is I dollar cost average every week into funds, into stock funds. And so I'm in that market as well, even though I expect we will see softening in the stock market continuously in the coming months. And then I'm looking at properties in Florida and properties in North Carolina, but it could be anywhere as well, because I want to grow the midterm rental asset class of my portfolio. And so what do you do? What do you do now? What should you focus on? Well, number one, you want to make more cash, right? So if you're not here yet, where you're like, I can't even think about investing in a vacation rental or a property in the mountains near me, right? If I can't even think about that, we don't have the extra money for that, then you focus on just making more, growing your business, right? Growing your side hustle, making more cash so that you can put cash away and start to invest it when there's an opportunity, because there will be some great opportunities in the next year or two. And then you want to be careful as you start to grow your cash, not to invest or not to spend on depreciating assets. You want to actually focus on spending on appreciating assets. So store cash, hold cash until you're able to invest in a real estate project or in something else that is going to generate money for you without you needing to do it, right? And that's the key thing here, is like, now I have really multiple ways that money can come to me, that God forbid something happened, I couldn't work for a while, I didn't want to work for a while, and like I have ways in which my money is working for me, right? So I don't have to grind it out every day, which is going to erode my health. And that's what I want for all of you. So multiply your cash and income so that you seriously don't have to work if you don't want to. Maybe you have little kids and you really do want to spend more time with them. And maybe it's like right now you want to do it, but maybe spending a little bit more time building this up right now is going to be advantageous, because in a few years you are going to be able to have more time, because you have assets that are appreciating and cash flowing, and that's going to be huge for you. If you're in the coaching space, which you probably are if you follow me, we started coaching because one, we want to help people, and two, we wanted to create financial and location independence for ourselves. But none of us are like, yeah, I want to grind doing like coaching calls all day, every day, right? Like no one wants to work that much. You do want some level of freedom. This is why you started this. And so that's why this conversation is relevant. I want to educate you all so that you make some good decisions with your money, so that you have freedom, that you have choices, that the main thing is you can keep following what God says about where he's leading you next, because you are going to constantly evolve. It's not going to stay the same. He's going to call you to the next thing and the next thing and the next thing, your next purpose, your next destiny. It's going to keep growing as long as you keep following him. But if you are stuck trying to just pay your bills, or just focus on, having security, financial security in terms of like your daily security, you're not able to even think about the elevated purpose, the bigger destiny that he has for you. So that's why this conversation is so important. So anyway, I hope this helps. If at any time you need help with, growing your coaching income, growing your coaching business, figuring out how to sell a high ticket, figuring out how to, craft a high ticket course, then please make sure that you follow me on Instagram, you reach out and send me a DM and follow the links, highticketempress.com. I love you, and I will see you on the next episode.